Good evening, everyone. Welcome to tonight's OTC video. I'm going to keep this brief as the last couple of nights I feel like I've dragged on a little bit. Today was a very, what I thought was a very frustrating day. And I'm not typically one to, get emotional about the market or trades, although I am a human being, so it's sometimes hard not to. And I think it's clearly evident as to why, but I'll get into that in a second. As for the broader indexes, we saw a gap up this morning. Again, gap ups are not necessarily bullish in a weak market. They're actually more bearish than they are bullish because they create holes, and I'll explain that in just a minute. And to the contrary, gapping down in a bull market is actually a more bullish occurrence. So it's actually kind of the contrary, although, we are tacking on gains here today. The market, like I said, could be just setting up for a very, a little bit of a bounce here. Let these averages, again, continue to draw down. That'll be the real sort of, I think, precursor for what ultimately happens next. And I suspect that if the market does, want to have another wave of selling, that wave of selling could be a lot more ferocious than what we just saw the last couple of days. So, not totally unexpected, and actually, I think this leans more to the argument of we will go lower. As we didn't see, like I said in last night's video, this snapback type price action where we just, ram right back up all in, one day. Rather muted. We saw a gap up intraday, this morning. And here's a look at the intraday time frames. You saw this gap up right here. I'll show you like a 5-minute chart just for sake of clarity. Here is the gap up, and we kind of, ping-ponged around for the better part of the, the day, closing, on the upper end of the range, but like I said, not this blast-off type of trade. And furthermore, what I also want to point out here is look at the volume. Volume really running at half the pace of yesterday. So most of the gains being tacked on here again overnight, and that's typical in a weaker tape. So we'll see how this plays out. Again, give it some time. Patience is a virtue. Let's go through some of the trades here. I'm not going to add anything. I have not added any trades so far this week, separate from Sunday night's OTC. I'm waiting for this market to kind of give me some true colors. We got the initial break. We didn't make a new pivot low. We still have not seen, a new pivot low here, which doesn't necessarily mean, anything. But again, I'd rather have a nice clean setup here with the market, a little 2-3 day bounce that could potentially lead to, like I said, another wave of selling. But let's let that scenario play out. Let's let some of these stocks that have had large moves kind of reset back up. I've been in, kind of on the sidelines with Netflix. I'm still watching Netflix here. Kind of base. I'm watching, Tesla as well. So I have a couple of trade ideas. I actually have a lot of trade ideas that I'm watching. My current radar right now has 3, 6, 9, 12, 15, 17 different trade ideas, all sort of, in the mix or developing. And they range, there's a pretty wide range from banks to, technology to 3D printers to, lots of different things. So a fairly wide, array of trade ideas. So we'll see what happens, like I said, in the next couple of days and over the next, who knows, over the next 5, 6, 7, 8 sessions, there could be a whole new slew of trade setups to key on. As far as what we have now, there are no longs as of yesterday. Netflix hasn't, triggered an entry yet. Amazon, gapping up off the lows, and an inside day, not much real change here. Again, just a consolidation. This is consolidating price action. As like I said, these moving averages, stocks tend to go, break or rally with the average, support or in this case resistance of those averages. So give these things a chance to kind of set back up. As we've seen some, big price movement. GMCR, on the heels of this morning's announcement with, I don't even know, Dr. Pepper, whatever the news was. You're seeing all these gains, again, a gap up, and this is just a function of a volatile market. Even, even on the volume side, still underpacing yesterday's breakdown. So, unfortunately, this is the nature of a volatile tape, and my my need or my desire to manage risk effectively, because I adjusted the stops down from 136, what were they, 138 down to break even, is also the reason that we are now out of this trade for no gain. If you look at the 5-minute chart or even a 3-minute chart, within a matter of 3 minutes, the stock in the opening print of the day, basically we saw its high, and then it never did anything from that point going forward. So my opinion of this is that, this is frustrating, but this is just sort of a dead cat bounce. Although it's got a news story behind it, you can see, what did price tell us? Well, we ran into the 21, and that's where we met resistance and sold back down. Am I going to reissue a new short here? I don't know. On the heels of this price action, I'd have to wait for maybe another day or two before, I would potentially re-engage here. So unfortunately, this one, easy come, easy go, all in a matter of, let's call it 3 minutes between yesterday's close and the first 3 minutes of the day. That was that. And again, it's not a perfect, like I said, it's never a perfect science. I tried to, be nimble in terms of risk and, moving stops to break even for sake of making sure we protect our gains. And, that need to manage risk tightly is also in a volatile market sometimes can work against you, as this is now a stock that has no profit attached to it, whereas yesterday, we had a nice little potential profit there. So that's just the nature of the beast. Unfortunately, there's not much I can say other than we need to you move on, to the next, and you move on to the next. PCYC, again, these biotechs are a little nutty, highly volatile. This one, gapping up and not hitting stops or anything, but certainly, wild price action here. And that's not just in this stock, but, all these biotechs, and we'll get into that in a minute. Here's, again, just that intraday, closing on yesterday's lows, and, within a matter of moments, these things can just, pop on a dime, making it, somewhat erratic to trade. I still like the trend overall. Trend is still down on the daily. We still have, good significant resistance up here around 126. But like I said, these biotechs are a bit wild. So we'll see what happens in the next couple of days. See if this can, resistance comes into play, and see if we turn back down here. Amgen, another biotech name, inside day today, snapping back as many biotechs saw higher prices today. Snapping back, but didn't take out yesterday's highs, didn't take out yesterday's lows. This is really just an inside day. And again, the volume here, underpacing, prior day's volume. So you can see, even though we're making, tacking on, gains, it's certainly, there's clearly not the engine there that we're seeing on the other side of the trade. Celgene, like I said, all these biotechs, what easy come, easy go. They break down yesterday, probably sucking in, a lot of shorts here under this pivot, and then, turning up today. Who knows what this does early morning tomorrow, bumping up against that resistance. And I suspect, as we've seen several times, we may trade through this and then, who knows, trade back down. We have a flat 21 here. A flat 21 is a signal of a lack of trend. These stocks just may not be ready yet. Doesn't necessarily mean that they go up and they go up and they rally again. So don't assume that. You have a flat 21 EMA. You have a trendless stock. I was looking for this to start to turn back down. On the heels of this price starting to deteriorate. But again, we haven't seen new pivot highs and we still have pretty substantial resistance up here. But certainly not acting the way many other stocks are. So they just may not be ready yet overall. And that's here's the IBB. And the IBB is really it's an ETF, and it's driven mostly. I think the largest weighted component in there is Biogen, and you can see Biogen, the way this thing gets tossed around like a rag doll, up, down, up, down, up, down, up, down. Violent 2.5% swings daily. And, closing on yesterday's lows, a bunch of topping tails, and then, going higher today. causing the IBB to basically gap up. Again, if I show you the intraday, right, looking very weak as the close yesterday, gapping up this morning, and then right back to 309.50, where it's had some trouble over the last couple of days, but today clearing through that level again, albeit on declining volume. But you can't argue with price, and rather than sit around and look for this thing and say why, let's just again cut it, take the loss for what it is. It's 1.5%, and move on to the next. I wish I would have, in hindsight, the biotechs to me all look like good reversal candidates going into this year. Based on what we saw the last couple of days, where we saw, tail down, and then yesterday cracking, on rising volume, that's a trade I probably would take, 10 out of 10 times, and then, gapping up today and clearly, probably sucking a lot of people in on the short side or sellers in, and then turning up today. So what we call hard money, just a hard money situation. So I'm going to stay with the ones that are still in play and just kind of move and run. On the heels of Regeneron yesterday, again taking out the stops by a few pennies and then breaking down. It just hasn't been a clear trade with many of these biotechs. So I still think Amgen looks good. I still think PCYC is decent, but as far as the rest of them, it's a tough trade right now. So we'll just move on to the next. Like I say, BABA, little 3-day bounce here into the averages, and again gapping up this morning and just basically selling off all day. And this is probably another setup for another low here. Again, these setups tend to work real nicely where you crack, pivot support, you get these little bounces into the averages, and then, it kind of resumes, and that's how that price action, starts to, morph. So, all things look good here. I'm going to keep stops. I'm going to keep everything the same as, stock closed on its low, and I suspect that this will have some follow through, in the coming days. Apple, not much in terms of enthusiasm on the bounce, again, on lighter volume, gapping up, not really showing any real momentum or aggressive buying, stepping back in. Like I said, bounces can occur, just naturally in the sense that, the gap, most of it coming on a gap up, where, yesterday we were down here and then, now we're up here, and then, a day from now we're up here. And then all of a sudden, this little 2-day bounce, and you're set back up nicely. So let's weather the storm of these bounces, as I do think many of these are like dead cat, in the sense that they're just basically rising price for ultimately lower prices. Let some of these moving averages catch up to the price of the stock. Again, as these things kind of go down, these moving averages need to catch up. And in doing so, price tends to gravitate back up to those moving averages. And again, it works the same on the long side. As we rally up, again, you tend to gravitate down, and then that kind of thing. And lastly, Johnson & Johnson, hard. It's just a tough trade. I'm going to stay with the pivots, stay with the stops for what they are. I've stuck this trade out for couple of weeks at this point. Hasn't really gone against me, hasn't really worked for me, other than maybe a couple of a little bit here and a little bit there. As we look up a time frame at the weekly, again, I think it's building cause for lower prices. You can see a clear break of this support, failed breakout in the sense that the stock made new highs over here and then couldn't hold, so quickly reverses, and now it's just kind of contracting and being tossed around a little bit as these moving averages have lost their trend on the weekly. So I am trying to keep tight stops and make sure we're not taking on huge pockets of risk, but at the same time, in a market that doesn't really have a trend, or it has lost its trend, it does make it somewhat challenging, as it's going to be hard to get follow through until such point we get follow through. It's just the nature of the way markets move. We don't go, markets don't go straight up, and they don't go straight down. They tend to ebb and flow. And the patient trader will ultimately be who stays with his trade, and so long as it doesn't get away from him or her, is the one that will, see their way through in the long run. So it's not about one day up or one day down. It's about letting this, this whole story build until such point we get the trade that we're looking for. And again, if it doesn't happen today, that doesn't mean we don't go back to it, at a later time. Case in point is, I think, Amazon, a good example. I've traded this stock, a couple of times historically. Some of them have been for gains. Some of the times I think we've been stopped out. But you can see over the last part of even the last year, right? You saw all these pops and drops, in this stock, over the whole year, down and up and down and up and down and up, and where. If you're not nimble, if you're trading these moves and you're not nimble in the sense of just getting in and getting a profit and moving on, you could be short one day and have a profit and it'll be gone 2 weeks later. That's just the sign of a market that or a stock that that's contracting, and typically what you see in there is this flat 21. Again, this is the weekly of Amazon, the flat 21 EMA. And that's a sign of a stock that has lost its trend. And it's easy to see in hindsight, right? Because now we have all this data that's, oh, look. But you have these wild, this is basically one whole year of trading before this eventually starts to now turn down. And I suspect that this will lead to a larger, a break of this ultimate range. Again, that's just my intuition and what I see developing here. But the point I'm trying to make is that we're never going to it's never going to be we go straight up or we go straight down. There will be times, and they can last for, like I said, a year. This is basically, from, what is this, May? This is from May through, it's now January. So, this is a 10-month window of erratic price movement. And I'm sure many people within all these pops and drops, I'm sure there have been many people, many traders that have been in the camp of, I'm buying Amazon, it looks good. When the stock's up here, it looks good. And when the stock's up here, it looks good. And when the stock's down here, everybody wants to be short. So you got to be very, very careful and nimble in a volatile tape. The tape that is losing its trend. So we talk about the market, and I look at the weekly, right? Well, we may be, and I went into a whole spiel yesterday about this, maybe we lose our trend. This could be a year process. This could be a year of volatility. This could be a year, that maybe the 21 EMA, the weekly here, just starts to flatten out. Well, what does that mean for us as traders? Well, it means we can expect, maybe some of this. Who knows? And we'll look back 6 months from now and say, oh, look, see, it's a trendless market. When it's down here, everybody's going to want to be short, and when it's up here, everybody's going to want to be long, and so on and so forth. And so let's just go slow. Again, it's I say it like it's a team effort, but it's really me making the calls. I'm the quarterback. But I am cognizant of the way trend changes occur. They don't just happen all in one day. They tend to happen over a period of time. Like I said yesterday, for this weekly chart to really start to change its tone, this 21 EMA is going to have to flatten out and then potentially roll. And the way it will do that is it will drop, right? And then it'll pop, and then it'll drop, and then it'll pop. And all this, week in, week out volatility will then cause this, general market to basically lose its trend. So, there's a valuable lesson in here in that, when you have a market that is potentially changing direction, yes, you may see, pockets, air pockets or windows of time where, you get, like I said in Amazon, here's a daily, where you get these, drops and then these rallies and then these drops, but you have to be nimble in your trade. So I'm going to, I may look to take a little less, look for my trades to be a little shorter term. Who knows? Who knows how we'll adjust? We'll kind of play it by ear and kind of see what sets up. But, there may be more trades. They may be, shorter duration periods. Who knows? But I at least wanted to, put that out there as a little food for thought tonight. So as I said, let's give the market a little time to kind of figure itself out. There are, like I said, a bunch of trade ideas that I have, cooking that I'm watching. But I certainly don't want to put too much out there, as the market clearly is, like I said, just take a little time. All right, everybody, have a nice night.